Hi and welcome to Macdulio's Algorithmic Trading Lessons Part 2, Backtesting a Hedger. So I put together this little video about my most recent work, which was making a new hedger routine, a breakout hedger to be exact. And this is the menu I came up with. So the first two lines, easy to get them out of the way. Trading starts with hedging. That was something that I mentioned most recently in a blog entry. And hedging actually starts with a good trail stop. Now this is something new. Forefront, I should mention that I have never met anybody in my life who was making hedge routines, or even writing a trail stop. So I'm alone with all of these things that I'm about to present to you. The purpose of hedging is not to make money, but to prevent from losing money. There was an interview one time with Charles Danner on Bloomberg, where he said that we are Dutch, we don't want to lose money. So there you go. Bullet point 1, making an indicator. What you have on the screen right now, on the bottom of it as a matter of fact, these green lines are a slightly modified consolidation indicator, choppiness indicator in other words. And I figured that exhaustion, buying or selling, would be a good prequel to what's about to go down next. So concentrate on the bottom of this indicator if you would, and basically around this perforation and below is what we are interested in. I used a 7 sample consolidation indicator. I kind of tend to use odd numbers for some reason, and what I'm looking for is 2 prints in the exhaustion area that was preceded by a number that was greater. So basically this hedge routine is going to anticipate that if this hard press would be broken, say on the upside, then you would have an additional movement occurring that you could take on a hedge for, in case you are holding in the opposite direction, and so spare yourself all the trouble and the aggravation that you would have to go through by putting on a full hedge or even over hedging. So in this case, when I have a couple of pushes into the exhaustion, then I pick the high of this, which would be say 110.83.6, and I have a displacement of 3 pips, and this is where I pick up my hedge. And then you would see a movement. In this case it's not much, it's about 9 pips, but what's important is that for those 9 pips you would be hedged in, and when the price comes back through, then eventually you get stopped out with something in gains, and you completely alleviated all the pressure, the trouble that you would be put through otherwise. Now here's a few examples on the downside. I do have a displacement, so I think like 8 samples for the text, and so we're basically talking of these bottoms again, 110.33, 34, minus 3, so it's 31, and that would mean that you would get hedged in at this level, and from there on you would be traveling hedged. And again, later there's another call, which would be these two pushes down, and now you're picking I suppose this low and undercutting it by 3 pips, and another travel down. Okay, so let's see, we made up our minds about sequence filtering. Sequence filtering makes for you've been looking at hourly charts, so basically a sequence of 4 is what I'm monitoring for. The 2 pushes down, like I mentioned before, the one previous note, and I need one more print to be able to figure the lowest low out of the bunch, which is these 3. Because I was making these screen plots with the values on the screen, I was able to look through like a significant distance back on MT4 through the data, and concluded that these 3 pips would be something I would like to utilize as a displacement for the buy stops and the sell stops. One of the major differences between making an indicator and making an EA, which is automated trading algorithm, is that the indicator usually works with cycles, while an EA is going to try to post an order real time, and so it does not always require any kind of cycles. It only requires the last 4 samples we spoke of. Now, trail stop, as you would see, is a very, very complex subject and a very tricky thing. I will show you a number of backtests on, as a matter of fact, on 2 different brokers, and I'm gonna make some suggestions. So this little EA that I made, I called it Hedge Breakoff, and there's a lot of surplus things here because I just grabbed an existing routine, but it made it, of course, much faster to carry out. Like yesterday, maybe in like 2 hours from inventing the indicator, I already had the backtests and all the answers I really wanted, but I spent another day trying to find issues and bugs, and run several backtests more. So this part is showing the modification that I did on the choppiness index, and the size calculation is still adjusted to 500 to 1 leverage. It could actually take twice this size, but that's what I went with. That's what I normally would use. Now, the question is, how do you backtest a hedger? So hedging is only possible if you have something open, and obviously these backtests, they're not gonna start with open positions. So what I had to do was, if there are no open positions, then I'm just going to open at these breaks anyways, and that is how I can backtest the hedger. So there is no position, but where it would be hedging, it would just be opening a long or a short. So when doing backtesting, a lot of times it's helpful to print things on the screen, and then you can look it back on the log what is happening with your EA. For instance, if the values of an array array are filled up correctly, and if your logical expression is giving the right results. Oddly enough, I got hourly filters yet again, both for the short sides and the long sides. And unlike the previous video where the opens were occurring at market values, these are actually, because of their displacement, they are pending orders, and this time we're operating with buy stops and also sell stops. Now here comes the interesting part. I had to implement my existing trail stop, which is quite complex, multiple parts to it. Yeah, as you can see, it's extensive. Since I just moved out to the 1 hour charts recently, and my trail stop was designed on the 30-minute RSI filters, values, whatnot, this is a bit of a conflict. I'll tell you what I mean. For instance, if you are trying to grab a current read, a current value, then close 0 would come back with the same value both on the hourly time frame and as well as on the 30-minute. But if you want to use close 1 and you've been on the 30-minute time frame and now you move out to 1 hour time frame basis, then all of a sudden your close 1 half the time is going to give back different values than what you are expecting to handle, or what you built everything with. So therefore you need to start changing these close ones to iClose symbol 30 and 1 to always refer back to the same numbers as you meant to. And now we are down to the testing part. So this was basically the result of the first backtest that I ran. It was only from the beginning, I think February, and you know, these little hedge positions always end up being stopped out via the trail stop it's using, and at the end it goes berserk, and well, look at them numbers. So this was all due to the trail stops and how it was written. So the first thing to say about this is there are not intentional mistakes, and they might actually end up being beneficial. The very thing that transpired here is in my trail stop, the original trail stop routine, I refer to magic number 1 and 2 just as numbers that I want to use as filters for different parts of the trail stop itself. And in this case, these numbers, magic number 1 and 2, were being used by this routine. So it made itself exempt, so to speak, to basically the first step of being hedged in. So the point is that not only the copy and paste not only causes issues when you're switching up between time frames, but when in this case when it comes to utilizing parts of a trail stop, you have coinciding variables that have different use based on the purpose of the current routine. So what I had to do was find this problem, find this issue, and come up with an answer. And this backtest shows how it was always supposed to be, how it's supposed to be running. The bottom line ended up being a little bit less, but you never had a position that did not have at some point a trail stop clicked on, versus the first one where the trail stop remained the 0.2, which was the code for the trail stop system as to how to handle this particular order. You can see here the orders, timeline, modifications when it modifies orders. The modification is always about ratcheting the trail stop ever closer. So now here comes some comments about the difference between brokers. Here's a different broker, IC Markets, and they have a number of issues, to be fair. The first and foremost in this case would be that the RSI2 values are not going to match with the ones that I get on Vantage, not Vantage, Vantage FX, yeah, that's it. And this basically meant that the part of my trail stop, which would be based on RSI2 Sharpie readings, at times would not be working, and that would end up with catastrophic results. So now, why I'm mentioning this for is that there is no auto trading routine that you can just put on any broker and would end up giving you the same results. If you don't have the same broker and the same leverage and the same everything, you can just forget about using somebody else's routine and don't ever purchase or buy anything like that. This little snapshot shows one particular instance when on the 15th of January this routine would open a buy, and eventually it clicks on a Sharpie long stop, which would work perfectly well on Vantage FX and would do nothing on IC Markets. The other issue with IC Markets is when you are trying to modify, you end up modifying a pending order, you're gonna bump into their limitation that they impose on how many transactions you can make a day, and the modification is a transaction in their mind. So you end up being deemed hyperactive, and they would suspend your account. So I would not recommend auto trading with IC Markets. So we basically went through the testing part. The devil doesn't sleep in the details. There's so many ins and outs to what a broker does and doesn't do. One of the limitations that I would bump into when backtesting on Vantage FX is has to do with compounding, and people seem to be afraid of that word, and I don't know why, because that's the only way to grow an account. Anyways, what happens is they have a 50 lot limitation, and once the backtester hits that number, then normally wouldn't be able to open a position that is exceeding the 50 lot size. So I had to implement this max lot function to limit down if it happens to go above it. Now about RealLife Application, need to remember that this routine would get the trail stop part erased, and the original one that is running on the 30-minute is going to be in place. So I had to do the best I could to sync those two things up and develop the understanding that how the trail stop is actually going to behave versus what the backtest is showing. The sizing, well, there's a risk of snowballing when you start taking on breakout positions that would be exceeding the size that you're about to hedge. So over hedging, you need to really be cautious about the size that you're about to open, and as a first step, I think I put 1.2 multiplier, so 20% greater size is what I'm going to be opening with. Now the other thing to remember when you end up being called into a hedge, this kind of hedge, is that you would want to remove stops and targets for all open positions that are not hedge positions. And so we have arrived to the end of this video. This last screenshot was when I was increasing the size a little bit on Vantage, just to see what it could have done in 26 trades without any positions being open. And remember, this hedger was never meant to make money, it was meant to prevent from losses. But as you can see, it can trade on its own, and it can trade very well, considering that there are never initial stop losses, only codes for the trail stop system, which tells to the routine how to proceed. Thank you for coming, thank you for watching. Please return, subscribe, and if you liked it, hit the like. Thank you, have a good day, bye.